All right, welcome. Thank you guys so much for joining another weekly market outlook video. This week we are starting the new monthly candle, and I do want to go over that. But first, let's take a look at the economic calendar here. So we do have a decent amount of red folder news this week. We have ISM manufacturing PMI numbers on Monday at 10 o'clock. JOLTS job openings at 10 o'clock as well. And then we have NFP employment change on Wednesday and NFP Friday as well. So a decent amount of important news drivers. But yeah, let's get right into the charts here. So we know that this week we have quite an eventful week with all of these red folder news happening every single day. Yeah, let's get right into it. So, I always start my analysis on the dollar. And what I am anticipating here on the dollar here for this week is for us to take out this weekly low. So, based on this weekly candle right here, so based on how we closed, I can anticipate for previous week's low to be taken, right? I want to see prices take out previous week's low in this upcoming week. And one thing that I do want to mention is take a look at how this 2 weeks, wait, I don't even know how to work that. So basically, one of these candles is 2 weeks. So I guess 2 weekly double weeks candle here. I don't know how to work that, but based on the not the weekly, but every bi-weekly, on this bi-weekly candle here, I can also anticipate for the bi-weekly candles low to be taken. And look at what we have done on the bi-week. We have created a fair value gap, and based on how this fair value gap is created, I can anticipate for prices to rebalance the inefficiency that we created on the bi-weekly time frame. So here, I mean, all I know is that we're going to rebalance this fair value gap. I don't know if we're going to respect it. I don't know if we're going to disrespect it. All I do know is that we are probably most likely going to rebalance it. And why can I know? How do I know that? Well, because of the way we created it. And the low-hanging fruit is, right? The low-hanging fruit for this model here is for us to rebalance this inefficiency. So going on to the daily time frame and the weekly time frame, relative to the bi-weekly's order flow, the higher time frame objective here would be for us to rebalance that bi-weekly fair value gap. So now, with that in mind, I would base, lower time frame models based off of the bi-weekly's order flow. So, like I said, weekly, daily, they're both telling us that we're probably going to take out that low and rebalance the inefficiency. And I drew up this premium and discount level here. So from this daily swing low to this daily swing high, from that swing low to that swing high, there's the dealing range. And notice how we have traded into the discount level of that dealing range. Like I said, I don't know if we're going to respect that weekly, not weekly, but bi-weekly's fair value gap, or if we're going to disrespect it. All I know is that we're going to rebalance into it. And also, one thing I do want to point out is notice how this week or this monthly candle closed, right? We closed on this monthly candle here, and we closed above the previous monthly candle's high. Because we closed above this previous monthly candle's high, and we created this fair value gap, I would treat this fair value gap here as a breakaway gap, meaning I don't want to see prices rebalance into this inefficiency. I want to see prices stay above it, at least for this December's month, right? I don't want to see prices trade back into here. I want to see prices maybe like consolidate maybe and then have some sort of closure below the second fair value gaps candles high. So maybe something like that. Who knows? But because of the fair value gap theory, I would treat this fair value gap as a breakaway gap, at least for this month. But if we say otherwise on the weekly time frame, then I would target a rebalance of this inefficiency on the monthly time frame. But this is a weekly market outlook video, not a monthly. And like I said, the weekly candle right now is telling me that we're going to rebalance that bi-weekly's fair value gap. So after the dollar, right? If we have a bearish bias on the dollar, I would anticipate for the indices to have a bullish bias, meaning I want to see higher prices on the indices and I want to see lower prices on the dollar. So they trade inversely here. On NQ, I can anticipate for prices to take out previous week's high, simply just based off of this weekly candle. So what is more likely to happen just based on this candle here? What I am anticipating for the next weekly candle to do is, open, maybe create the low, so manipulation, and then take out the previous week's high. That is what I am anticipating coming into next week, just based off of how we closed on the weekly candle. And notice how, like I said, we closed on the monthly candle on November, or today is the first day of December, so technically we are starting a new month. So based on how we close here on this monthly candle, I can anticipate for the monthly high to be taken. But one thing that I do want to point out is that we have a lack of displacement here on, this is the 4-hour time frame, and notice how we're just trading back and forth right now. It's really, this past week has been quite a slow grind up, but nevertheless it was a move up. But like I said, we're lacking displacement. So even though based on this monthly candle that we can anticipate for the monthly high to be taken, I wouldn't really, really just push the button just because of the monthly candle, just because of how we close here. If we had displacement candles, meaning if there was fair value gaps that got created on the daily time frame, if there was displacement, then I would be more inclined to really say, okay, previous month's high is the draw of liquidity. But because there's no displacement, at least on the daily time frame and the weekly time frame, I'm not entirely convinced about previous month's high. What I am, confident in is that this week we're probably most likely going to take out previous week's high. And notice how we closed on Friday. So with this closure on Friday here on the daily candle, I would actually take this as an expansion model if we can trade into, some sort of hourly fair value gap. Because of how we created this daily time frame or this daily candle, I can anticipate for this previous day high to be taken, right? And the reason why I say this as an expansion model is because notice where previous day high is. Previous day high is, I'm going to make this a blue line. Previous day high is that blue line. Previous week's high is this line right here, that black line that says PWH, previous week's high. Notice how both of these time frames are suggesting higher prices. So if I were to take a model right now, it would be based off of the daily time frame. I would take off partials at the daily high, and I would leave the rest of my runners for previous week's high. So there's time frame alignment between the two time frames, the daily and the weekly. But the reason why this is considered an expansion model is because I'm taking this on the daily time frame, but the weekly time frame is suggesting even higher prices. So this blue line this blue line's price level is at 21.18. Previous week's high is at 21.81. So that means there's room for us to go higher here. Is essentially what I'm saying. But yeah, coming into Monday's trading or even at Sunday's open, I would anticipate for previous day high to be taken, and sometime this week or maybe even Monday, I would anticipate previous week's high to be taken. After we take out previous week's high on NQ, I would sit on the sidelines and wait for more, for more price, for more structure, per se. So let's say some scenario like this could happen. We take out previous week's high and we begin to reverse. And taking out all of this generated liquidity here. So notice how we, we spent this entire time, basically we spent this entire previous week creating all of this liquidity with this really slow move up here, right? And because of this slow move up, we created a lot of liquidity. We created a lot of, sell side liquidity. So this would be liquidity. This would be liquidity. This would be liquidity. And yeah, so I mean, if we do end up reversing here next week, I actually wouldn't, I wouldn't be surprised. But I'll get into why, there's more reasons to why I would anticipate or where I wouldn't be surprised if we reversed. Once I get into ES, but yeah, my objective here coming into next week is previous week's high. After we take out previous week's high on NQ, I would switch over to intraday models. So going into ES on this Monday here, right? Notice how the daily time frame, the daily time frame, the weekly time frame, and the monthly time frame, they all have the same high. So it's every single high on the daily time frame, the weekly time frame, and the monthly time frame is at 6,060. That means that we are going to take out that high. We're going to take out that liquidity this upcoming Monday. I would anticipate for prices to take out previous day high, previous week's high, and previous month's high on Monday. After we do complete that objective, I would sit on the sidelines. I would see, okay, are we going to continue to push higher on ES, or will we take out the high and reverse? The reason why I would anticipate, or I wouldn't be surprised if we had a market reversal, is because notice where NQ is trading. We have yet to take out all-time highs. So there's a pretty large, SMT divergence here between NQ and ES. And at every swing high and at every swing low, there will be SMT. I'm not saying that we're going to create a top. I'm not saying that we're going to create a bottom. All I'm saying is that if we do get a market reversal, it would be like, this would be a good time, right? I actually wouldn't mind seeing a, not a market reversal, but a retracement of some sort, because NQ is lacking the strength like ES. ES has already taken out its respective all-time highs, and NQ hasn't. So that's just something to keep in mind. But yeah, like I said, NQ, ES, I have the same bias. I want to see higher prices. I want to see the weekly high get taken. After the weekly high gets taken, I would then switch to intraday models, meaning I would not base my bias on the weekly time frame. Rather, I would base my bias on the daily time frame using daily candles. And bias is really simple. It's, for me, the way I look at it is based on this weekly candle, right? The way we close on this weekly candle, what can I anticipate here? Can I anticipate for the high of this candle to be taken, or would I anticipate the low to be taken? And let me change the colors here. So I'm gonna make the red line the low, and I'm I'm going to make the green line the high. So with the very upcoming weekly candle, right? Would you anticipate for prices to take out the green line or the red line? And keep in mind that we're going to open up relatively near the black line here. So we're probably going to open up somewhere around that black line. So ask yourself, are we closer to the black, or sorry, is the black line closer to the green line, or is the black line closer to the red line? We're closer to the green line. So that means I could anticipate, like I said, I'm going to anticipate for the green line to be taken. And the green line is previous week's high. And that's literally what buys this to me. It's that simple. If you want to make it a little bit more complicated, you can. Like, would I take every single trade that looks like we're going to create this high or take out this high? No. There's parameters for my entry pattern, and that's for a completely separate video. But yeah, lower prices on the dollar, higher prices on NQ, ES, and I don't really touch on YM. So this video has been running for about 16 minutes now. I did want to go over some of the trades that I took last week, but I'm gonna try to keep it short and try to keep this video below 20 minutes. So I'll go over basically a gist of both the trades I took this week. So the first trade I took this week was on Wednesday, and notice how we created this 2-hour fair value gap. The way we created this 2-hour fair value gap, I could anticipate for prices to rebalance it, right? And notice how from this swing high to this swing low, there's a dealing range. And I want to see prices trade up into premium here and rebalance the inefficiency. So in this case, like I said before, once we rebalance the 2-hour fair value gap, I don't know if we're going to respect it or if we're going to disrespect it. All I know is that we're going to rebalance this fair value gap, or we're most likely going to rebalance this fair value gap, and I have the confidence and the conviction to take the risk to be a part of this trade. So basically I aligned a 15-minute model, 30-minute model, and an hourly model to the 2-hour order flow. And the 2-hour order flow or 2-hour objective was to rebalance inefficiencies. The second trade this week is the same concept. Take a look at how we created this 30-minute fair value gap, right? Like I said, let's apply the bias concept to this 30-minute candle here. And would I anticipate for the next 30-minute candle to take out the 30-minute low or this 30-minute high? I can anticipate for the next 30-minute candle to take out this previous 30-minute candle's low. And what are we doing on this 30-minute candle? We're rebalancing a inefficiency. We're rebalancing a 30-minute fair value gap. So notice there's a fractality in the markets here. So the first trade I took on Wednesday was to rebalance inefficiencies on the 2-hour time frame. Literally in a span of about like 15 minutes, I took another trade with the idea that we're going to rebalance inefficiencies, but on a different time frame, the 30-minute time frame. So there's that fractality that ICT talks about, and I don't actually show it here, but there's a dealing range from where my mouse is here. This price level is actually a 5-minute swing low. And this high right here is a 5-minute swing high. Take that swing low to that swing high, and you can get a internal 5-minute dealing range. And prices is going to be, notice how prices hasn't traded into the discount of that 5-minute dealing range. It's just something that you should, study. But yeah, take my entry, 2-minute fair value gap, target the 15-minute low / 30-minute low. We end up, doing that. We rebalance the 30-minute fair value gap, and then, like I said, I don't know if we're going to disrespect it or if we're going to respect it. All I know is that we're going to rebalance the inefficiency. And that sums it up for my weekly market outlook video and a little bit of a trade recap. Hopefully, this video, helped you in some sort of way, open your eyes up to a little bit of, different perspective on how to see prices. Take it for what you see. And yeah, thank you guys so much for watching. And until next time, I will see you guys later. Peace out. Skadoosh.